Hello, and welcome back to another episode of the Collective Clicks podcast. This is your host, Brandon Bateman, and today I'm joined by Mark Gabryel. We talk a lot about his journey starting the real estate investing business and doubling down on inbound marketing recently. He has an insane close rate, one of the highest of all of our clients, and we're going to be talking about some of those processes that he's using to close inbound leads. I'll see you there. Mark, welcome to the podcast. How are you doing?
Fantastic. Love real estate. Love when I get to work on. I'm passionate about it. Get to talk to cool people like you too. So having a great time with it.
Awesome. Yeah, I'm excited to have you on this podcast episode. We talked about how like our paths have kind of crossed before this a little bit. Like we've been in the same room a number of times, like virtually or not, but we haven't really had a chance to get to know each other a ton. And mostly I've heard about you from my team because we've been working together on your digital marketing for a little bit. So I kind of like have like a pulse, like I know the name Mark Gabryel, but I don't like know you as a person. I only know your advertising numbers. So for anybody else who's listening to this, they don't know who you are, like, you know, basic story, where you came from, all that kind of stuff. Like, how'd you get into this world of real estate investing and what are you doing now?
Yeah, so I'm one of those classic people that college wasn't really a fit for me. At 15, I was homeschooled. So at 15, I got my first real job working. And when I started getting a taste of money, it's kind of like school was out of the window for me. So I started working. It was a natural progression for me being from, the Michigan, Detroit area to get into skilled trades, union labor, stuff like that. So my whole first kind of 5 years as an adult were all in construction. I got married pretty young. And at one point in time, my wife was like, "Hey, we should start flipping houses." And I said, "No, we're not going to do that." So I went to work one day, came home the next day. She had gutted the bathroom and she's like, "Well, I guess we're flipping houses now." And I said, "Well, I guess we are." So that's originally how we got started in real estate, was specifically through living flips that were purchased out the MLS. And Jerry Norton, close friend and mentor of mine, at some point in time had told me, he's like, "Yeah, you need $40,000, but do the math. It took you 2 years to do that because you're living in it. And you'll come to find that you could have just worked a fraction of the amount of time at Walmart as a greeter and made another $40,000 in that same amount of time." And I was like, "What? That's stupid. It's not true." $40,000 in a check was like the most I had ever seen in my life at one point in time. And I did the math and I was like, "Oh, he's right." And I probably would have worked less if I didn't do it this way. So at that point in time, we were like, "Okay, let's take an audit. What is Jerry talking about here? What does any of this mean? How do we be more efficient with our time?" And that's been a 5 year watch through mud trying to figure out what that looks like. And eventually we ended up, full slipping and wholesaling. Still didn't listen, got into more flips, got into more trouble, never made a dime off of my final who at one. Just, I was hard headed and didn't believe it. So it took me a few years to kind of, get my head on straight. So we went from, we ended up making that transition, doing wholesale deals off the MLS. We were doing like 3 year, 5 years ago probably. And now we're at the point in time where we went from 25 deals in calendar year 2024 to this year in calendar year 2025, we're pacing for 90. So it's been relatively rapid growth, but a lot of work and self-evaluation had to go into it on the back end. So that's kind of how we found ourselves where we're at today. And yeah, a lot of work, but we love it. A lot of fun. It keeps me going. Yeah, I get bored really quick. That's my thing. So it kind of keeps me on the move.
Yeah, I love it. Also, I want to call out because this will live for a long time. When we're recording this, which is mid-October 2025, the reason is a lot of people like to start saying halfway through January, "Oh, we're pacing for 200 deals this year." How hard is it to have a good 2 weeks of January, right? Compared to how hard it is to have a good, like pretty much 3/4 of the year that you've already nailed down. Even with the deals you've already done this year, you've more than doubled what you did last year, which is part of why I wanted to bring you on this podcast, because a lot of people out there right now are just having a hard time with the real estate market as it is right now. And we have many clients, you included, that are actually excelling, actually progressing, have a better business this year than you did last year. And it's cool just to see those like bright spots of what's happening and understand a little bit more what's going on with that. So let's talk about the journey of the big stuff that has changed. So you talked about the mental shift that you had at the beginning from like, I could flip one house every 2 years and live in it, to I could flip more houses and eventually kind of getting more into wholesaling. And now you're at the point where you're doing a bunch of deals. So I understand kind of like what changed in your mindset to get you into wholesaling, but What has had to happen in your business to make it possible for you to go from doing fewer wholesale deals to a lot more wholesale deals and have that pretty significant growth over the last few years?
Yeah, so obviously real estate is really fun because anybody can get into it. There's relatively a low barrier of entry. If you can find the money and you can find the house, then there's a way that you can bring value to justify your profit on a transaction. So the low barrier of entry was interesting, but it presents a scalability problem. And that's something we found out pretty soon. It's like we realized, okay, we're making 40,000 on a flip, but it takes us 2 years. How do we do that in 6 months? And then it's like, oh, well, you have to hire contractors, not do it yourself. Okay, well, eventually over time, we kept breaking it down further and further. And we realized, okay, in the amount of time it took me to flip this house, I could have done 4 wholesale deals for X amount of dollars and not had to worry about, all of the problems that come along with it. So we regularly do a deep dive kind of audit on what's working, what's not working, things that might be like a barrier to growth. And one thing that we found over time is that it kind of becomes at some point in time pay to play. Like you can side hustle for a long time, but if you want to break through and have regular business, regular transactions, at some point in time you're gonna have to pony up and start paying like all the real players in the space. So obviously the first progression would be to go to cold calling and direct mail because it's cheap and you can get cheap leads. The problem is you get what you pay for, cheap leads end up being cheap leads and they don't convert that well, or the cash conversion cycle is really slow. So in 2024, that was our first full year moving where we had inbound marketing channels running. And I am very passionate about people being willing to have the skin in the game and to pay for those high intent leads. Like I said, you're going to pay a lot of money for it, but the amount of them that convert is so much more compelling, and not only that, the scalability it has because it's so trackable. So that was a major shift that we had to make, moving out of those cheaper, lower performing lead sources to the more expensive, higher risk, but higher return type of leads. So that's one thing that really drove a lot of the growth, because you also, think about it. You probably have a bunch of people, correct me if I'm wrong, you probably have a bunch of people that are used to using cold call leads and they're like, oh, well, Brandon's leads are supposed to be better. Let's switch to Brandon's leads. And they switch and they don't get any deals because they're not handling the leads different. You have to relearn your lead management, your acquisition process. You almost have to come in with like that closer's instinct from that second you get on the phone the first time. So it's been a learning process, but that's one of the main drivers we found that really changed things, is not only because it's really easy to say, well, they're better leads, so they close better, but also from a business perspective, it presents a lot of scalability opportunity because it's so repeatable and such a trackable lead source.
Yeah, totally understood. So let's talk about some of those things that had to shift for you. And I'm actually really curious to talk about the beginning of this journey, which I don't even know when this is. How long have we been working together? And did you do any online marketing before you worked with Bateman Collective, or was it?
No, the first one I ever did was with you guys, and we probably started late 23. So it's probably November 23, but the first full year we had with you guys is 24. So actually now we're coming up on our full 2 years as a client with you guys.
Okay, cool. Awesome. So at that beginning stage, right? You just started putting up this larger amount of money to spend on more expensive marketing channels. I want to know what specific things you did at the beginning there to recognize how you needed to change, and also what lessons you learned along the way. Like what things did you think you need to change, but you didn't actually need to change? And then are there some other things where you feel like the changes that you made a huge impact in your ability to close leads?
Yeah. One thing I want to elaborate on this is both of them work. Like outbound marketing still works. It almost became also in some sense like a lifestyle choice that I wanted to make, because both of them do work, but one of them requires like a massive lead management funnel and a bigger team, because that cash conversion cycle, by the time you get a lead and the time you close it, is on average like 9 months or something like that. And so for me, evaluating that, I was thinking, okay, let's do like a lifestyle audit here. How do I want to manage this business? Do I want a big office where I have, 3 lead managers and 4 acquisitions managers or things like that? And I was like, you know what? I bet you there's a way I can figure out how to do this where I make the same amount of money those guys are making without all of that, without that overhead. So for me, coming from the beginning, I wanted to find a way to make it profitable and scalable without like a disgusting amount of overhead that I see a lot of other people have. And so that's why moving towards inbound marketing was such a no-brainer, because I was finding, was I closing transactions off of outbound? Yes, I was. But it was like getting a root canal every single day, getting on the phone and talking to those leads, which if you build the systems to have all that in place, very profitable. I know plenty of people making way more money than me that do it that way, so I'm not digging that method. It didn't work for me. Like I get bored really quick, so I need to have a variety and I need to be on the move a lot. So, and I like to be at home with my family. So another thing that weighed into it, but looking at those two different ways you can have that business. You can either you're going to spend the money either way. You're going to spend it on a team and spend it on lead management, or you're going to spend it on better leads. So I made that pivot and we switched to that. And I don't think I'm going to go back. I think where technology is at, it's something that we're going to double down on, moving towards more inbound marketing. So that's just a couple of things in my thought process where I just had to evaluate those things. Like I knew it worked, but it hurt me every single day to have to do I like those leads where it comes in and I'm getting paid 30 days later, and if I can make that a repeatable process, then it's like a money machine. I just put more money in, more money comes out. And obviously there's a lot that goes into that, managing those leads and proper practices. It's not just like you get a lead and you're going to close it. You don't know what you're going to do with it. But for me, it was like, I'd rather pay more money to have less leads that are better. And so when we ended up doing the conversion chart on both of those from 2024 to 2025, it was like we had this many leads and this many contracts, and it was a full inversion. This many leads to this many contracts. Once we ended up making that shift, it was literally a full inversion. And I was like, you know what? Maybe this is something we need to double down on. And it was a great change. Obviously you got to come in with, like I said, that closer's mindset. You're getting on the phone. Like what we like to do is best practices before 30 seconds is up, we're calling them 3 times. Like we're triple dialing them. And then we're repeating that over and over throughout the day on standard. Every hour we're calling them again. We want to make 12 touches in that first 12 hours. We followed all best practices with it, but it was a mindset shift away from let's just see how long we can build rapport to how fast can we get on the appointment. So once we made that change, the strategic change to switch to inbound, and then also we had that mindset shift that priorities are changing here. Like you want rapport, but we're not going to make the rapport so important that we're not going to try to get on that appointment. Like the end goal of every phone call is appointment. And like that's the standard we hold up. Because when we get on an appointment, we know with these leads, we're closing 1 to 4 appointments. So it's a very simple conversion to follow, as opposed to some of these other marketing channels where we needed to spend, 9 months to follow up to get them to that point. It's like very simple. Phone rings, get appointment. And we just found removed a lot of the other barriers to success and a lot of other systems I would have had to put in place. When it's like I have my lead management team or my VAs that are on the phone, they know when they're getting on the phone, their only job is to shine the wheels for the acquisitions team, which is me in this case, and get that appointment on the books for as soon as possible. Today is always the number one priority. So those are a couple of the changes we had to make. One being psychological, coming in with that closer's mindset, and the other one being just being humble enough to track the data and find out where it takes you, make your decisions off of that rather than the ego of what you think is going to work at the start.
Sure. All right. I want to dig more into some of the things you said, but first I want to zoom out a little bit. So let's just talk about metrics. Like over the last couple of years, how many of your deals have been coming from inbound marketing sources? Which inbound marketing sources? Do you know how many leads it's taken you to get a contract? Like what those numbers typically look at for you, return on investment, any of that stuff that you're willing to share?
Yeah. So in calendar year 2024, like I said, we did 25 contracts all year, calendar year 2024, and that was with 590 leads. So doing that math, not super great. We're getting regular leads daily, but they're, nails on a chalkboard, getting them down the lead funnel from a lead to an opportunity, to an appointment, to a closing. It was like brain damage. So when we made that shift, it went from 590 leads in the year to like 250 leads on the year is probably what we're going to have this year. And we've also in October, tripled the amount of contracts we had with less than half the leads that we had. So just those two small pivots, the mindset change on how we're going to treat these phone calls and these appointments, like going for the close, and then being willing to, have the skin in the game of paying for the quality leads. It was literally a 2 times conversion. We had half the amount of leads and triple the amount of contracts.
Yeah, that's crazy. So let me get this straight. So you're expecting 250 leads for the year and 90 contracts and 250 leads?
Yes. Yes. And granted, there are JV deals that mix in. Probably half of those come from pay-per-click and SEO. And then the other half come from, JV or whatever various things trickle in, people that you know. But either way, half of those contracts are going to come specifically from web forms, PPC, Facebook, various channels that are inbound marketing channels. But we don't spend a single dime on any single outbound. We're not sending mailers, which, not that I would never go back into that if I built the team out properly, but we haven't made a single cold call since March, and we haven't done a single mailer since last annual, so a year and a half ago.
That's insane for like macro level, like number of leads in your business, number of contracts in your business. It's absolutely insane. Just because, the average investor, even closing pretty well, is going to take a lot more than that. Do you have any idea what kind of return on investment numbers you're hitting? How much you're spending on marketing compared to what you're getting?
Yeah, so we spend probably 10 to 15 a month, half of that being pay-per-click with Google specifically, and we've rolled into SEO and Facebook ads, so we're expecting to get some return on those moving into Q4 and Q1 26. But when we made that shift away from outbound, we wanted to be very conscious that we didn't want to just double our budget and expect results. Like, we knew we had to engineer things on the back end for this to be profitable. Because I know you and I could both probably name dozens of people that get into the business and they think they need to just spend more money. I know guys that they're like, well, let's spend $10,000 a month, but they don't have their sales funnel set up properly, and they spend $10,000 a month and don't get a contract. You're like, well, this doesn't work. And well, I was like, I know everything works, because I bet you any market you go into, you can find somebody doing 7 figures in the business. Like, I know they work, but I wanted to be very conscious. Like, let's not come into PPC and just double our budget and expect it to work. I didn't want to up it. So the whole time we have stayed totally stagnant at the ad spend, which is 10 to 15,000 every single month. And we're exploring now to scale it up because we're seeing the results and seeing like the repeatable scalability of it. But 10 to 15 a month, and our average deal at the start of the year, it was probably somewhere around like 8,000, but we've been really conscious about pushing those assignment averages up. So digging deeper on our acquisitions process, and then also refining our dispo process, which has been a huge focus for us lately. And we're pushing it. We've almost doubled our average assignment since March this year.
Mm-hmm. Yeah, which is not bad for Tulsa, as a market. So it's greater Tulsa that you're working in, right? So we're not talking about like prime giant markets where there's like, this isn't California where you can.
No, yeah, I think the median home price is like 250,000. So getting average of a 15,000 assignment is not too bad. However, I also find that to be somewhat of a limiting belief. Shout out to my friend Brett Stewart. He's in Abilene, another client of yours in Abilene, Texas. Their population is like 150,000. Most people would hear that and think it's crazy that you could do, have wholesaling, flipping. He does all of it. And he's going to be over 2 million in revenue this year in a market of 120,000 people. So some people, they'll think, well, if this was Salt Lake, I'll bet you I would be making 40 grand, not 15. Well, like I said, there's people that are doing it. And I think a lot of people catch themselves in that limiting belief of, well, my market just doesn't support the bigger spread. Well, it does, it's just a lot of people are willing to let that be a limiting belief. So yeah, it was 8,000 at the start of the year through some coaching and very, very intentional decision-making processes that we went through. We bumped it up to now we're around like 15, so almost doubled it.
Okay, nice. Yeah, so I'm just calculating things out here. So you're basically at 150 grand all in the marketing, assuming you're going to average 12,500 a month, 150 grand for the year, and you should do probably 800 grand in revenue.
Yeah.
And then some of that.
Yeah. So we're somewhere between 6 to 8x, depending on how you do, because we want to calculate all of our OpEx besides that, because we use Salesforce. It's like the Lamborghini of, CRM. So we have some other expenses, but from like everything spent to the end of the year, we're probably about a 6 to 7x on our business entirely.
Yeah, which is an incredible multiple. So that's on the business as a whole, not just on like the ad spend, right? So we're probably, I mean, we're up there. We're closer to 10x probably on ad spend by the time you factor out those different factors, and a lot of that comes down to closing. So I just wanted to zoom out and say like these are so we average as a business like somewhere usually between 4 and 5. Like that's our business. Like that's what our clients typically get. Now there are some circumstances where people are doing better. You're one of those people, right? So this is where I'm trying to, see and understand the different things that are happening, how that's possible. What I love about your situation is we have some clients where sometimes like in a market, the cost per lead just gets really cheap suddenly because, competition drops out or whatever the case is. So they end up with a really high return on investment, and that's cool. But it's really cool to see somebody who closes at a high enough rate and makes enough money on their deals consistently that really you're the person who in Tulsa makes it so that other people have a hard time doing PPC because they do it and they're like, oh, these leads are so expensive, they never close. Meanwhile, Mark's getting your contracts and he's looking at the leads like, I don't mind paying that price. I'm totally willing to pay that because I know I can close them, right? So that's something for you to think about any marketing channels. If you look at it and you think these leads are too expensive, I can tell you one thing that's generally true about the more successful our clients get is the more successful our clients get, and this is either just like really stellar, smaller operations that run really efficiently with great margins like yours, or I'm talking like really big wholesale companies where they start hitting, $5, $6, $8 million a year in revenue. Generally, those companies are actually spending more money on leads than any other real estate businesses. And they actually tend to be spending more money per lead. It's not they're just buying more leads total. They're spending more money per lead than other people. They just have the back end processes that support making the most money from those leads. They make it so that they can pay that high amount of money. And everybody else looks at it like, I would never be able to pay that much money for a lead. Meanwhile, Mark's sitting in Tulsa raking it in because he has a great dispositions process. He has a great lead management process, acquisitions process, that it doesn't matter that leads are expensive because you're good at getting the value out of them. So let's talk about some of those factors a little bit more. I'm curious, do you think it makes a difference to your closing rate to not have the outbound channels? This is something I've asked myself about for a little bit. Is there a case for somebody saying, actually, I'm going to close my inbound better if I get rid of some of my lower lead quality channels because you're just dealing with those higher quality leads. So you're accustomed to that mindset of every lead must be a deal. It must be really close to a deal. It must be a good quality lead. Because in theory, you could close outbound stuff all day long. You could close inbound stuff all day long. You just close at a different rate. But do you think your close rate on the inbound goes up when you have just less leads to distract you?
Yeah. So there are two factors there. Obviously, one of them is like a time bandwidth restriction. How much time do you want to be on the phone with a lead that has a low probability of closing? And if you have a closing team that you're regularly giving good leads to, if you start throwing bad leads into it, is it going to be worth it when it might have made more sense to just pull 25% more really good leads instead of 100% more, questionable leads? My philosophy on it is, obviously I want to keep a lean operation, so I don't want to have a lot of overhead. And that's kind of why we're so specific there. It's like a principle thing for me. Like everybody keeps telling me, you need more marketing channels, Mark, you need more marketing channels. Someday PPC is not going to work and you're going to need more marketing channels. And like, there's months where PPC doesn't work right now. But the thing is, a lot of people get leads even off of PPC where they're not handling the lead properly, or they're coming at it only to close it now. And that one might still be alive down the line. Because the way I look at it is, you already paid for it. Treat it like you're going to try to convert it, even if they're not ready now. Because a lot of people complain, well, I switched to PPC and I get a lot of retail leads. I'm like, well, you're inferring their intent first things first. You don't know everything that's going on. So a lot of people walk away from those. Or like there's one deal we moved where another big company in town, they're flippers, not wholesalers, but we both got the same lead. They didn't even call it because it was a 600 square foot, one bed, one bath house with a trailer on the same property and like in a Class D neighborhood. So how do you move a mobile in a neighborhood that also has just a brick structure that's a 1-1 and both of them need heavy rehab? Most people don't try to convert that lead and they go call another one. I'm creative enough to where I'm going to pursue the leads, even if they're not highly desirable, perfect cookie cutter 3-2 flips. So a lot of deals that other people walk away from, we still try to work them. And even if we can't, we come at them with the intent to close them. But if we can't, we still leave them in a follow-up funnel so that we still can convert that. When other people would be like, this is a retail lead, we're going to try to close it. If we can't, we're moving on. I still leave it in our follow-up funnel. And we know that a lot of these are just a timing thing. Maybe they're signed with an agent, but 6 months go by and they're tired of it, and you text them at the right time. I hate spending money and then just walking away from it. I've already got the lead, leave it in the funnel, automate what you can. I still have a lead manager. I just don't have a team of them calling a bunch of really cheap leads. So my lead manager we have our SOP we process, and we just have a really hard focus on monetizing every lead, and those leads are going to come from very specific sources. So I agree with you on that. Like if you took me with a close rate of 1 out of 4 appointments, and then you threw a mix of like 10% cold call leads in there, I'll bet you the whole thing would come to some semblance of a grinding halt, because I'd be questioning my closing ability. I'd be questioning my rapport building tactics, just because we threw like that monkey wrench into the operation. So for me, being that my priorities are good leads, low overhead, high close rate, there's almost nothing you could do to convince me to put like cold call leads back in. And I know everybody has to do it at some point because it's cheap and you can get them. But we're not even accounting the elephant in the room. That's a regulation on calling guidelines and things like that. I just think in the future, it's going to need to be an inbound tech style of business. And so we're not only doing what we think is pragmatic now, but we just think the business is going to continue to trend that way over the future.
Yeah, no, that totally makes sense. I am curious. You talked about how the focus right now is really just like the lead comes in. Yes, build rapport, but get on the appointment. Get on it as quickly as you can, which I noticed this is one thing that's true generally for our clients that close at a better rate, is they're making the appointments happen fast, right? They're not like booking out an appointment to next week, because with these types of leads, just like, you said follow-up's really important. There's going to be a right time. And that's absolutely true for probably like half of your leads. But if you're anything like our other clients, you also notice there's a good number of them that are like ready to move right now. And in 2 days, the deal might be gone, right? So getting on the appointment fast, absolutely. What I'm curious about though, is for this type of lead, how are you qualifying for that appointment? Different investors have different kinds of criteria. Like I'm sure you've heard of the pillars of motivation. Some people are looking for like 1 pillar of motivation for an appointment. Some people are looking for 2. What's your criteria that you have in your business where you say, we're willing to go on an appointment if this is true?
So obviously there needs to be equity. Like nobody's going to ignore there has to be equity. I'm not a big fan of like the sub 2s and stuff like that, because for me, it's like a bandwidth thing, just like it is with cheap leads. Sub 2s and things like that are a bandwidth issue for me. So the main thing is, have they said they want to sell their house? If the answer is yes, we ask, do they have at least, 30% equity? If the answer is yes, we're on the appointment. Because there are plenty of deals where, they don't have a ton of equity, but they're not expecting to make anything, But somebody would see that lead come in and think, oh, well, this is retail. Well, I could get that at 70% and move it for 75, and I just made $15K on a deal other people were going to walk away from. So my only thing is, have they said they want to sell their house? If the answer is yes, and they have at least like 30% equity, we're out there. Okay. Or would it be the other way around? Would it be 70% equity? No, I think it's 30%.
At 30, and then the 70 with the loan. Okay.
Yeah. And that's it. I want to get out there. Like, ask them on the phone to confirm what they were hoping to get for it. On our discovery process, we want to be on the phone as long as possible. We try to uncover motivation that's there. We will not spend a single moment arguing with them over price on the phone. And you won't spend a single moment arguing with them about price on the appointment either. Like, it's just not the way we set up our acquisitions process. It's really heavily built on rapport, finding out those drivers, fixing the solution, and then ideally the money ends up being not that important to them, which if they're a PPC lead or an inbound lead, typically they have higher rates of urgency anyways, so we don't make it a big thing. I notice a lot of people where they come out and on the first phone call, they're aggressively price conditioning the person, and you either lost the appointment because they don't want to deal with you, or the appointment is going to start off on a bad premise. So we'll ask them what they want. The form on the lead intake, we'll ask them that also. We ask them to reconfirm. Because by having them state it twice, a lot of times they're going to come down just on the second one because they're going to think about it and realize they were unreasonable. So it's one way to get them to lower it off of that. But also, we don't see any value in arguing with them on price until they at least know us and know who we are. You know, like you might be ruling somebody out that might have had a good reason to work with you just because you came at that first phone call kind of aggressive, being like, well, you know, you're asking like double what we'd need to buy it for. Well, what are the odds you're going to let you come out that evening and look at it when they know you disqualified yourself versus the other way around?
Yeah, totally fair. And this all falls super in line with, in general, just the Joe Homebuyer like acquisitions training, which I know you've been to, I've been to.
It's killer, dude. It is a killer.
It is killer. And a lot of the focus is like, hey, if you make it about price, then it's about price. If you don't make it about price, then guess what? It's not as much about price. I am curious. One of the biggest objections we see with PPC leads specifically, because these people are just kind of going online, they might be filling out lots of forms. You know, they could answer the phone and just be like, well, you know what, Mark, just tell me what your price is. Like that's all I want to know, right? So the seller sometimes approaches it from the standpoint of being really focused on price, which makes sense. How do you deal with those kinds of situations?
So this is a belief and a practice I've put into practice very recently, as this summer. So let's say, well, round numbers, let's say the ARV is 100 and they're wanting 75,000 and they know it needs repairs. And realistically, the number needs to be 50. You know, you want to buy something at 50% of ARV and sell it to a buyer at 70% of ARV. My question I always ask myself on the phone is, do I believe if I go on this appointment and I said yes to their number, not my number, and I said yes to their number, that they would sign a contract today? If the answer to that is yes, I'm out there as fast as I can. Because that way you can qualify if they're actually serious. You know, are they just giving you a price and they're not going to sign? But if you go through your phone call, your discovery process, or even the appointment, and you can say to yourself conclusively, I know they would actually sell their house at their price, regardless of how reasonable it is, then to me, that's enough to be on that appointment.
Sure. Because you know they have the intent, they're trying to sell. The only thing you're unsure about is the price. And you think you can get it.
And if there's intent and there's any form of equity, then what are you doing? Like, get out there, you know, you build your rapport. And we have a kind of unique acquisitions process once we get on the actual appointment too. And I think this is a game changer. You know, often you'll walk up, hey, I'm Mark with Joe Homebuyer. Thanks for letting me come out. I know it was short notice, you know, and you go through the introduction. They're going to want to go like, okay, well, here's the house. Look at it. And I don't do that. I don't start out that way. I'm like, oh, well, you know, we'll get to the house. Like, the house is important. But first, like, can I sit down in your living room with you at your table? Can we get to know each other a little bit? Because, you know, maybe we're not a good fit to work together. I want to understand more about you guys and your situation. You know, how can I be of service here? How can I help? And we'll get to the house after. And most people are like, oh, okay. And then you realize you've been talking to them for 30 minutes, 60 minutes, and you guys get along really great. And you find out, well, the price isn't really that important. You know, it's that, you know, this is their inherited house and it's got a mortgage on it. Really, the thing is they just can't pay for it. They've got some money saved up, but they're in the rent every month and they just need to get out from under it. And it's like, if you just walk through the house and take your pictures and throw a price at them, you missed all that. And again, you disqualified yourself versus disqualifying the lead. We are very strict on not disqualifying leads too fast. Unless they're like yelling at us, telling us, don't call me, get out of here, never come to my house again, which that doesn't happen because our acquisitions process is like so soft, really, not hard sales driven. That doesn't really happen, but our focus is not to disqualify leads and to not disqualify ourselves. Because the metric we know used to be, how many offers can you make in a day? Like pre-COVID and then even during COVID, the metric of success was how many offers are you or your team making a day? And our perspective on that has changed from how many offers are we making a day to how many quality conversations are we having either over the phone or in person. So it's just a couple of small psychological changes. Like I said, the one big one being, would they actually sign the contract today at their price? And don't disqualify ourselves before we even go through the acquisitions process.
Yeah, totally makes sense. I am curious. So let's just say a new lead comes in right now. You said you're going to call it right away. Who's calling it right away? Is that something you have a lead manager do, or is it something you do yourself?
Very recently, we started having our lead manager take some of them. If I'm available, I will. but almost exclusively right now because there are days where I'm running 5 appointments. I need to have somebody that can take the phone call. We do have an AI phone answering service to kind of help gather details, but that's meant to be like an absolute last resort fallback. It's either I or the lead manager that's calling them on the phone. And then, like I said, very low pressure. We're not going to price condition them on the phone. Because you can find out if somebody has equity. If they bought it in 2021, they probably don't have that much equity. If they bought it in 2001 and they haven't refinanced, they probably do. So we'll be looking that up after the phone call on discovery, but we don't spend any time comping. We don't spend any time arguing with them about the price. Like, hey, let's get to know about you guys. Here's a little bit about what we do. Tell us about your situation. We'll see if we can be the right ones to fill the role. And it really is a disarming process. And like I said, either me or the lead manager goes through that discovery process on the phone with the exclusive intent, book the appointment. That is the goal is book the appointment. Save all the hard conversations for when you're face to face with somebody. Because as we know in this day and age, like something over text might be interpreted way differently than if you said it to somebody's face with the nuance of the inflection in your voice or whatnot. So we don't have any hard conversations over the phone. All of our conversations we save for at the end. And even then we work really hard to frame them in a collaborative context also.
Yeah, understood. Well, you've been a wealth of knowledge, Mark. I'm sure we could like go back and forth on this for a really long time. But I can tell you some big things I took away from this are get to your leads quickly, go on the appointment, right? If you know the source of the lead, that's your pillar of motivation, right? Don't focus on all like the other stuff. Like, is this lead motivated? Is it worth my time? Is it not? Because you got people like Mark out there that are your competition that are just closing these leads right away, and they don't think about any of that stuff. I love how you're not.
Yeah, by the time they underwrote the lead, I already have the contract.
Exactly. I love how you're not like researching the property and all that stuff. Like some of the stories I've heard from our clients, the biggest deals they've done are like rookie acquisitions managers that have no idea what the property's worth. And that's why they're able to get such a good deal, right? Because so much of this stuff is like, is it a retail lead or did you tell yourself it was a retail lead? And is that the price that you can settle on or is that the price that you told yourself you can settle on, right? So much of this is just comes from down to just like being curious, being willing to learn what's going on with the situation and listening a lot before you try to negotiate. And that kind of thing. So that's a lot of what I took away from this. And there's tons of little nuggets sprinkled throughout. Right before we wrap up, Mark, any last piece of advice you would give to someone? Let's just say someone's listening to this and they're like, yeah, I keep on hearing from people like Mark that PPC leads are great, but I just haven't been able to figure out the close rate on these leads. We haven't quite like dialed it down. Is there any last advice you'd give them?
Yeah, speed of lead, obviously very crucial. You can't go out to lunch and then call the lead after. Because, I mean, think about if you've ever filled out a web form on your own, whether it's for car repair or a car you're interested in buying. You fill one out, and then what do you do next? You go fill out 3 more. So speed of lead is incredibly crucial. And then if there's one thing that everybody takes away from this is the thing that I have found so decisive in our business this year alone. It's literally that question. You're on the phone with them. You're on the first phone call. You got them there. Ask yourself, would they even sign at the price they requested? If for any reason your gut says or your hunch is, yeah, they would sign, even though they're asking the full ARV, they would actually sign. That to me, that's the metric of a hot lead. We don't consider anything else. At that point in time, would they actually sell? If they would actually sell, then you have to be out there. You have to meet them and have to go through the discovery process. That one question alone, because like I said, you have to change that perspective to have that closer's mentality with these leads. If you don't, you just throw them in a follow-up process too quickly, Mark's going to get it before you ever call them back again. That's just how it works.
Yeah. It's, this industry would be easy if there weren't people like Mark out there trying to get your deals, right? So you have to be careful, right? Because this is a marketing and sales company, right? And really, like there's people like you that pretty much outsource their marketing. So it becomes basically a sales company. Your only job is to sell. And that selling is both an acquisitions, dispositions. There's like a teeny operational piece of like transaction coordination or something like that. But it's pretty much a sales company, which means there's a lot of people focusing on that. And there's a lot of people who are really good at that, right? So if you're not top of your game, what I think a lot of our clients end up finding is that the PPC leads close at a higher rate than other sources to someone, right? Like meaning the lead came in, this property is probably going to sell. If it's going to sell to you or not, where it gets a little bit hard because these leads can be competitive. I'm sure you've noticed it. Oftentimes there's multiple offer situations, lots of different investors that are going on appointments with the seller, all that kind of stuff. Like those kinds of things happen because this person went to Google and they found a list of all the real estate investors in Tulsa, Oklahoma. And they're probably reaching out to more than one of them, unless you got lucky and they contacted you first and then you called them right away and they never got to anybody else.
Which that's a rarity. Like that's a huge rarity. And a lot of them that we find, they've already gotten multiple other offers and they either didn't feel comfortable with the company that they were talking to, or they just didn't like the number they were getting. And frankly, I kind of like not being the first one because very few people are actually willing to sell their house to the first person that walks through the door. My competitive advantage is being the one that stands out among all the other ones. So oftentimes, maybe cold callers got to them first and they didn't like the offers they were getting, or they didn't feel comfortable working with that company. A lot of times, a lot of people get like, well, 3 people have already given you an offer. Is like, this is really worth my time. To me, I'm like, okay, well, I'm just that competitive guy. I'm going to show up and I'm going to try to beat him anyways.
Yeah, I love it. So if you take anything from this, just know Mark is out there and he's going to steal your deal if you don't shape it up. So
yeah, or we can just work together, guys. Let's just do it together.
Yes. If you're in Tulsa, talk to Mark about JV and all that kind of stuff. But yeah, thank you, Mark, for taking the time to come on the podcast today. If anybody wants to get a hold of you after this, what's the best way?
Facebook and Instagram. I like to try to keep an active presence on there. Shoot me a message with any questions. I'm sure you'll provide my handle and information on that if anybody's interested to get it. So that's the best way to get in touch with me.
Amazing. Thank you, Mark, so much for your time. And for everybody else listening, I'll see you next week.